Hi there, this is Eric with Portfolio 24. Today we're going to go through one of the IPOs that is going to launch this week. Here at Portfolio 24, we do talk about IPOs, we talk about stock options, we talk about investing in the stock market and especially in high growth companies. Remember that all this information is for educational purposes only. It's not financial advice. Please consult with a professional. Now let's talk about JFrog. So what does JFrog do? jfrog is a DevOps company, and what they do is they help companies move their uh, websites to the cloud. You see, they have some key customers here, which is these are pretty much very big companies. You have AWS, Facebook, Dell, so they all use JFrog. So this is a very important cloud player. I'm not really going into the technical details of exactly what they do. The most important thing here is their business model and how they make their money. So they have a subscription type of business. So what you do is, if you go to the website, you're going to see that they have different subscription tiers here, from the free pro enterprise and enterprise plus. And then here it tells you how much you get you have to pay for the service per month, and this is how they make their money. So the good thing with the SaaS companies is that you can then use this data now to compare uh, the different companies to see which of them make sense for you to invest in them. So I would like to spend some more time here and actually looking at the data, at the numbers. It's, when you're investing, it's all a numbers game. So what I like to do is I like to look up the form S1 for each company that I invest in. So what you do is you just go to Google and type in the name of the company and form S1, and then this is going to pop up here. So what I'm going to do is I'm going to scroll down and just look at the form. Pretty much in the very beginning here, they are introducing their company, what they do. It's a liquid software company. Imagine there is no version, so basically things get updated automatically or automagically, as some people will say. This is very great for the digital transformation which is going on now. So as you can see here, one of the big things that they have is that they do have a lot of big customers. 75% of the Fortune 10 companies are their customers. So this is huge. And they are growing by 50%. Revenue growth is 50% year over year. That's very good. Uh, Net dollar retention rate is 139%, which means that actually they have, most of their customers are actually spending more year over year than before. They have been positive cash flow for the past 5 years, and they have multiple product subscriptions from many of their customers. They have customers in 90 plus countries. So what makes them different? They are really like an end-to-end unified platform. That is, that's like what makes this attractive to many of the companies that are out there. So when I come to the form S1, I like to look at the financial data. That's like one of the most important things here. So I'll scroll down here to the financial data. Sorry, I was just trying to verify, make sure that my recording is still on. I just scroll down here to the financial data. So I look at the revenue section. Let's see if we can make this thing to be a little bit bigger. Let me try to zoom in a little bit here. So I have to do zoom plus. Okay, it looks better now. So let's move this over a little bit. There you go. So this is the revenue here. The first line is the revenue, which is growing. It's about 50% growth here. And then the other line, the total revenue is $69 million. This is for the first 6 months of this year. So I would multiply this by 2 to give me a rough estimate of how much revenue is going to be this year. So that's about 70 million times 2, that's 140. Let's just say 150 million dollars and in annual revenue. So now if I want to value this company this year, I would say, okay, I take the $150 million times 10, which is about $1.5 billion. So, if this company comes out and then they are doing an IPO with a valuation of $5 billion, I just know it's overvalued. If let's say they are being aggressive and say that they want to use the valuation, the next year's valuation, let's say they're growing 50% year over year, and then right now this year their valuation is 104, sorry, their revenue is $140 million. If I add 50% to that, so that's 70,000 plus 140, that will be 210 million dollars. So next year's valuation will be at $2.1 billion. So now if the company comes and says that, okay, they are valuing the company at $5 billion, that's pretty aggressive, which I would not accept that. I would not invest in that company. I probably would not invest in that company unless there are some other things that make it to be very, very attractive. So that's how I look at it. So looking at the numbers here, I believe that I think jfrog's valuation is currently at $2.1 billion. So that's not bad. So I'll look on the day of the IPO, I'll just sit and watch and see if things settle down well, I'll buy some. I try not to buy the stock right away. I may wait a little bit for things to go up and down, just depending on the volume. If there's a high volume, then I buy initially. If the volume is not too high, just wait. It's going to drop down, and then I try to buy some later on. So that's a brief overview of what jfrog is and what we think about the IPO. I hope this video was helpful to you. Once again, I'll reiterate that one of the most important things that we try to look at is the form S1. This is for Snowflake, which is we're going to go over that in the next video. But like I said, when I come to the form S1, I like to look at the financial data, which is very important. I hope this video helped you out. If you think it can help some other person to save some money, or maybe build wealth, maybe invest in a much more smart way, please like the video. Also share it to your friends. Thank you very much for taking time to listen to my rambling. I hope this was helpful, and I hope you have a blessed day. Bye bye.